Hi dear traders and investors. Today's Friday, December 16. I'd like to share a regular market review prepared for InstaForex. You're certainly aware that major central banks have unveiled their policy decisions. On Wednesday, the Federal Reserve made its announcement. Yesterday, the ECB, the Bank of England, and the Swiss National Bank raised their interest rates. ECB President Christine Lagarde agitated investors by her remarks at the press conference. What happened on technical charts during these crucial events? Let's take a look. Here's the chart for gold, whose price tumbled yesterday. The metal began its slide after Powell's press conference. The price moved cautiously, but Asian traders caused a slump. Now the price is hovering around 1773 in the European and American trades. Gold has left targets on the upside and downside. These targets could be broken at once or after minor retracements in both directions. On the weekly chart, the instrument created a clear pin bar with engulfing. Here are stop losses set a couple of weeks ago. There's enough room for decline. The price could print lower lows. Let me remind you about the lowest target at 1615, which will hit sooner or later. What is the underlying reason for the previous growth? Gold rose in anticipation of the Fed's decision to moderate the pace of rate hikes. Investors wanted to find out ultimate levels for interest rates. Indeed, the Fed announced its decision. Now, traders need new hopes and expectations. Markets are driven by hopes. All crucial news has been worked out this year. Investors commonly revise their portfolios at the year end. Those who bought gold at lows a few weeks or months ago are now fixing profits. I wouldn't be surprised to see a bearish trend reversal in the new year. The same happened a year ago. Gold was falling at the year end and reversed upwards in the new year. I mean, it's logical to expect a trend reversal at the turn of the year. The euro-dollar pair began its slide. Finally, yesterday, the euro made a higher high during Lagarde's press conference. She spoke with hawkish rhetoric. All central banks follow the Fed's moves. Once the Fed increases interest rates, others follow suit. No wonder Lagarde said that the ECB would proceed with more rate hikes. I've made a conclusion based on my long experience. Investors follow the same path as Lagarde market players. Investors keep track of the news on large market makers and copy their moves. Likewise, major central banks followed in the Fed's footsteps. The euro-dollar pair is sensitive to the news from the US and Europe. It responds to such news which is realized at different times and accompanied by high volatility. Let's follow advice of great traders of the last century, limit losses and allow profits to boost. Yesterday there was a nice opportunity to go short at highs. Today I tried to go short, but my plan was disrupted by an upward retracement. I want to add to my short positions. I'm bearish about the euro. I reckon the euro could fall at least to the lows printed after the no-farm payrolls. Yesterday, after the ECB's decision, the first downward target was hit. If the euro falls to the support level, everyone will buy at the level. I estimate the downward potential move at 2,800 pips. I hope to earn and offset all my stop losses. The pound sterling deserved a thumbs up. Lagarde could trigger volatility in the pound because the Bank of England did not hold a press conference. The sterling dropped accurately and hit a target. It also hit the target formed after the non-farm payrolls. An ambitious downward target is yet to come. The dollar-yen pair is creeping higher slowly but surely. I foresee a nice upward target. If you bought the dollar-yen pair at lows, keep your positions. You will be able to earn handsome money. Currently, the price is making high lows and higher highs. Hence, I see the signs of an imminent buying activity on the 4-hour time frame. That's all I wanted to tell for today. Have a nice weekend. See you online next week.